India International Exchange Limited is the first and the leading exchange to be established in IFSC GIFT City, Gandhinagar. It is the wholly owned subsidiary of BSE Limited, was inaugurated by Honourable Prime Minister Shri Narendra Modi on 9th Jan 2017 and commenced trading on January 16, 2017. India INX is one of the world's most advanced technology platform with a turnaround time of 4 microseconds. It provides a common platform for all asset classes, equities, currencies, commodities, and fixed income for 22 hours a day. So with this, I hand it over to Mr. Bala.
Thank you very much. I wish everyone a good morning, good afternoon, good night, based on which geography you are. Just as we got the introduction about India INX. India INX is a new initiative from the BSE family, and this is also a very pioneering and a breathtaking initiative from India, where India is embarking upon a new concept called the International Financial Service Center, or the IFSC in short. And effectively what it means is that India traditionally, and it continues to still have capital restrictions in place, whereas this IFSC which has been created, which happens to be located at GIFT City, which is at Gandhinagar, and the nearest airport being Ahmedabad, which is about 500 kilometers north of Mumbai, has been designated as the first IFSC in India and the only IFSC in India at this point. And no capital account restrictions apply as far as this zone is concerned. This is virtually like a deemed foreign territory as declared by the central bank of the country, Reserve Bank of India, under their FEMA guidelines, or the Foreign Exchange Management Act. In March 2015, IFSC was actually notified by RBI, and subsequent to that, in the same month, all the three regulators, financial market regulators in India, which is RBI for the banks and NBFCs, and SEBI for the capital market entities, and IRDA for the insurance entities, came up with detailed guidelines specifying what kind of activities can be performed in the IFSC. And as part of that, as all of us are capital market participants, we all come under SEBI, and SEBI issued its first guidelines somewhere in March 2015. Wherein they specified what kind of business can be done here, what kind of exchange ecosystems can be created here, what kind of market infrastructure institutions in the form of exchanges, clearing corporations, depository, and also the various registered intermediaries, whether it is stockbrokers, derivatives brokers, or custodians, or trading and clearing members, or credit rating agencies, or investment bankers, all these activities which can be pursued in this particular jurisdiction. And as part of that, I think in 2016, subsequent to 2015, in the 2016 budget, or the fiscal budget which the government of India presents, the Honourable Finance Minister of India actually declared lots of tax advantages and tax concessions as far as this new geography IFSC was concerned. And a few of these tax concessions ranged from allowing tax-free holidays to all these intermediaries, including the exchanges and the brokers, who come and set up a IFSC company within the GIFT City. And these tax concessions are eligible over a period of 15 years, with the first 5 years being 100% tax-free, the next 5 years being 50% tax-free, and the last 5 years, that is 11th to 15th year, you can actually carry forward all the tax benefits in case you're not made profits in the initial period. And there is, of course, one catch in the form of a minimum alternate tax, or a MAT, which is applicable at the rate of 9%. So effectively, the maximum taxation rate, even if somebody is very profitable, will be capped at 9% as far as the IFSC is concerned. And in addition, when we talk about the Indian markets, normally in Indian markets, there are lots of costs which are there. The biggest of them is the transaction tax framework, which is the securities transaction tax and the commodities transaction tax. This has been perpetually abolished as far as the GIFT IFSC is concerned. So there is no transaction tax applicable as far as the GIFT IFSC is concerned. In addition, there are also local levies like stamp duty, which are applied by the state government, which again has been exempted from GIFT City. Also, any entity which is operating in India, when it repatriates dividend to its shareholders, there is a dividend distribution tax. That has also been exempted as far as the GIFT City is concerned. And all these are permanent concessions. And the biggest one of them came in the 2017 budget, where actually all capital gains tax for customers has been done away with. So any customer from any geography, if he comes and trades on the IFSC exchange at the India INX, in whatever product, whether it be derivatives or debt products which we have at this point of time, there is no taxation in terms of any capital gain which is leviable on that. So effectively, one could save close to about 30 to 35% taxation compared to what one actually has to pay in India. And all the tax treaties which apply to India also do automatically apply to GIFT City. But interestingly, India has been on the path of slowly coming out of all these tax treaties over the last 3-4 years. And they've been employing something called the general anti-avoidance rule, which actually makes it difficult for people to come from tax treaty countries. And that is why GIFT City has come as a solution, or the India INX now offers a perfect platform as a proxy to all Indian products which are traded on the mainland exchanges in India, which includes our parent BSE. And effectively, we are now able to offer all these products on the India INX platform at the GIFT City. And in less than almost now 16 to 17 months of our journey, we are now trading almost close to about $800 to $900 billion daily. Our peak volume was close to about $1.05 billion. And as we speak, every day we are seeing new scales and new liquidity thresholds which we are hitting every day. So that is just a quick kind of precursor in terms of the motivation as to what is the economic interest and the incentive for the investors to come in. Additionally, for international customers who want to actually take a investment or take a bet on Indian economy, I think now we are offering a perfect marketplace platform, which is state-of-the-art, technology-wise, absolutely perfect. From a regulatory framework, we still we come under the ISO PFMI guidelines, the Principles of Financial Market Infrastructure, and totally regulated by SEBI. And we have two entities, one the exchange, which is recognized, and the second one is a clearing corporation or a central counterparty, which is also a qualified central counterparty under our regulator. So it's a very safe place. And on top of it, there are lots of advantages in terms of tax concessions which are directly available to customers. So effectively, the recipe of having the best kind of market conditions, the best kind of regulations, combined with the lowest cost of transaction, as the ecosystem has already been created. And as we speak daily, we are seeing newer participants getting onboarded into the IFSC. And as we speak, roughly about 125 entities from capital market have started the process of creating a legal entity within the IFSC in the GIFT City. And roughly about 80 to 85 of them have also got the in-principle approval from SEBI to actually start their broking operations or trading and to become a trading or a clearing member. And as we speak in India INX, we have roughly about 40 odd brokers who are at this point of time fully set up to trade with us. And almost 70-80% of them are already active on our market. And we have basically created a world-class infrastructure. We talk about response time, which is in the range of 4 to 5 microseconds in terms of responding to every order acknowledgements. We have also created a state-of-the-art data center where not only the exchanges entire systems are located, but also we have co-location facilities which are extended to the brokers, who in turn can also extend it to their customers. So effectively, all the technology infrastructure is already well established. It's state-of-the-art and effectively enables anyone from anywhere in the world to be able to come and trade. And thirdly, what we have done is market availability. In India, typically markets have been open for 7 to 8 hours. And now we are talking about extended market timing, which may take it up to 12 to 14 hours. But in India INX, we are trading almost round the clock. So effectively, we open with Japan opening. So effectively, we start the market at India time morning 4:30. And we go on till almost 2:30 a.m. the next day morning, which is basically when Chicago market closes. So effectively, we have a concept of a business day. We don't have a system day calendar, and we basically have 22 hours non-stop trading, which is split into 2 sessions logically for settlement purposes, although trading is continuous. So the first session or the morning session, which is 4:30 a.m. morning to 5 p.m. afternoon, is actually settled on the next day morning on a T+1 basis or a T+12 hours kind of basis, or T+14 hours basis, with 8:30 being the settlement time. And the second trading session, which is the evening session, which is from 5 to 2:30, gets settled in the same day afternoon at 5 o'clock. So effectively on a T+14 to 15 hours basis, we are doing settlements and twice a day. So that's basically where the market is. And in terms of track record, now I think we have managed to complete close to about almost 400 to 500 settlements, and it has gone through very smoothly. And the biggest strength which we have is that this entire jurisdiction follows the US dollar as the preferred currency. So we don't have to look at any currency conversion as far as India is concerned. Effectively, we have taken US dollar or the international currency as the currency for the International Financial Service Center, or India INX at GIFT City. So effectively, it makes it very easy for all the global investors from across the world to come and transact on us without facing any foreign currency risk or any conversion costs, which otherwise they will be required to entail. And incidentally, last month there has been quite a few significant regulatory developments. The biggest one has been the announcement by SEBI to permit the IFSC exchanges to allow a segregated nominee account structure service, which virtually delinks us from the mainland India market, wherein we become a non-ID market, while India continues to be an ID market where the beneficiary accounts have to basically get registered. Either they have to take an FPI license and they have to take a PAN number and so on and so forth. All these are now done away as far as the IFSC is concerned. Effectively, you can go through your existing global broker, and the global broker could become a segregated nominee account provider or a snap service with us. And effectively, you could be routing orders for you across any exchanges, which includes India INX as well. And this will basically completely do away with the requirement for the end client to disclose his A, identity, B, get into onerous procedures in terms of establishing a tax number or a entity identification as far as India is concerned. So these are all completely done away with. So effectively, this makes us, in terms of our practices, now we are benchmarked with the best exchanges globally in the world, and we are more and more embracing global procedures and policies as far as the operation of the exchange is concerned. Now let me come to products, as to what are all the products which are traded on the international exchange. In terms of products, we are basically like any universal global exchange. We house all the products under one single umbrella, one single bucket. So if somebody becomes a member or a customer of our exchange, he gets access to all the products. To give you a simple analogy, let's look at, say, the CME group, which is probably the largest international exchange. There they operate 4 exchanges, which is the CME, which trades the financial products like S&P 500 and Dow Jones and Eurodollar and so on and so forth. Then they have CBOT, which is where the agricultural products are all housed. Then they have NYMEX, which is where the energy basket is traded, the crude oil and so on and so forth. And COMEX, which is where the precious metals and the bullion universe is kind of traded. So effectively, if somebody wants to trade on all these 4 markets, they have to go and take separate memberships. Whereas in India INX, we are offering you all of this as a single one-stop access. So effectively, any member firm which becomes a member in India INX gets access to all these products under one single umbrella, and their clients can also get to participate in all these products under one single umbrella. So that is how we have structured ourselves. So effectively, you get all products under one single basket, almost round the clock access for 22 hours, state of the art trading in terms of the infrastructure with connectivity available from all parts of the world. And lastly, we are absolutely well regulated with one of the finest or the best possible tax regime which is available, effectively reducing the cost for all the participants. So that is what India INX symbolizes and represents as a whole. And effectively, we are basically in that sense providing a solution to every investor, every entity which wants to participate as far as Indian market is concerned. And on the other side, India INX has also one more purpose, which is basically to also enable the companies in India to raise capital from rest of the world. And for that, we have created a debt kind of platform, a listing platform, which enables Indian companies to be able to tap international investors on any foreign currency, including even Indian rupee, which is basically called the Masala one. So effectively, all of this is possible. And in fact, over the last 6 months since we started this platform, we already attracted close to about $22 to $23 billion of bond programs, which have already been committed by international investors to Indian issuers. So that is where we stand. And eventually, today we list index products. Basically, we have India 50 futures and options, which is the benchmark index contract, which is created by the Standard & Poor or S&P Dow Jones Index. So these are the top 50 best companies in India, and it is actually well poised and to compete with SGX Nifty or the MSCI India Index, which is basically what is used by international investors. So this product has extremely high correlation with those products. And today we trade close to about $400 to $500 million in terms of futures and options volumes only on the index products. Apart from that, we are also we are basically right now we are the leading exchange as far as the IFSC jurisdiction is concerned. Effectively today we have almost close to about 75% of the market share. Our competition is basically just trading 1/4 of the market. And in fact, on Friday, that is the last trading day, we were close to about 90% market share in terms of our total volumes. So that is where we stand at this particular point. And I already explained to you about the tax structures. I already talked about what our value proposition is in terms of very good liquidity, highly competitive cost, easy entry, good financial safeguards, and highly state-of-the-art technology available. And these are some of the products which we already trade. And we also trade the entire bullion space, which is gold, silver, copper, and also the crude oil. So effectively now we also have commodities contracts available under the same roof. We are still awaiting for certain product approvals from our government and from our central bank, which is primarily to do with the foreign currency on the rupee dollar. But apart from that, most of the other products are already being made available to us. We also trade 107 Indian single stock futures and options, which basically represents almost 95 to 98% of the total volume of the Indian derivatives market as it stands. So effectively, a proxy for all the products which Indian markets are trading on is kind of available on India INX. In terms of the cost structure, I think we have just done a simple comparison with our two international competitions, which is Dubai on the west and Singapore on the east. And you can see that right now we are not charging anything, but eventually we may end up charging about 20 cents a contract, which will still make us probably 1/5 or 1/10 of the cost what it is available in other markets, and just a decimal fraction of what it costs as far as the Indian exchange is concerned. So I did talk about the debt listing program. So these are some of the big names which have already tapped our market. Exim Bank has been the biggest one with $10 billion. NTPC, which is the big thermal power producing company, and Yes Bank and IRFC. and National Highway Authority, which is the road building company in India. All these have come and raised money through our platform. And I explained to you about this segregated nominee account structure. I'm sure when you talk to your member firms, including Phillip, they will actually be able to tell you how they can enable and onboard you through the SNAP structure. And in terms of foreign customers, I think the process is very simple. People who have never operated in India, who have never even taken an FPI license in India, can also become customer. They can come in as an eligible foreign investor. And existing foreign portfolio investors who already registered with Indian authorities are automatically grandfathered to come and participate into IFSC. So that's in sum and substance in terms of what we are. And our membership structures is also very, very competitive. And this is simply a streaming quote which is available on our website, www.indiainx.com, where the live market is available throughout the day. So all of you can feel free to go to the website and access those pages. Of course, our feed is also carried by Bloomberg and other international data providers. So you can also look at those. And at this point of time, to incentivize volumes, we are also running a small liquidity enhancement program. And that is something which will be of interest to all of you. If you're interested, you can always look at our website and I'll be happy to even answer questions. In fact, I have 3 of my colleagues also with me in this room. Mr. Soundarajan, who is my colleague, who is the Chief Regulatory Officer, is here. He can help you in terms of any regulatory queries, how to get onboarded, how to participate, how the arbitration mechanism will work in terms of, because we are part of the Singapore International Arbitration Center methodology. Then I have my colleague Pratap Chandaramani, who is head of our business development and also head of our products. He is the one who has designed this liquidity enhancement scheme and will be able to take any queries as far as the LES is concerned. And I have Ojas, who is the head of our business development as far as the entire western region of India is concerned, Mumbai. And he is the one who also covers the PhillipCapital as an account. And all of my colleagues will be available to assist you in terms of any queries which you have. So with this, I will like to stop here and I will open the floor for any questions if you have. Thank you.
You can type your questions on the question or the chat text box, which is at the right hand side, the webinar panel, which is at the bottom of that webinar panel. You can type your questions on the question or the chat text box.
Okay, I have a question here from Rahul Kaitan saying, can we have a look at the commodities trading scheme, that is the liquidity and depth? Yes, it is absolutely possible. I did mention that we have a live streaming quote available on our website, and this is a real-time quote, and it also gives you the depth on the screen. You can feel free to look at it, or you can also feel free to go to Bloomberg and look at the screens. And if you are in touch with any of the broker who has those screens, they will also be able to give you the screens to look at. In terms of the next question is from Vaibhav Bosle. He says, what is the process for the participation of Indian corporates? So RBI has clearly said that Indian corporates can participate in overseas exchange based on their balance sheet sizes and what their hedging requirements are as far as the participation in commodities contracts are concerned. And FEDI has clarified in October that the overseas exchanges include the IFSC exchanges and India INX as part of it. So effectively, any Indian corporate can open an account with a broker of India INX in GIFT City by filling in the necessary KYC form records for them, and they can actually participate for all their hedging requirements. The next query is from Salil Kotari. Can you brief again about taxation benefit? So there are two sides to the taxation benefit. One is for intermediaries and participants who set up their own firm in the IFSC, and the second is for customers who come and participate through these broking firms into the exchange. Now I'll talk about the benefits of taxation for the customers first. So if you are a customer, you don't have to pay any taxes at all, because any transaction which you do on derivatives will not be treated as a gain or a loss. So effectively all of that is exempt, so you end up paying only 0%. For example, if you trade the India 50 futures and you buy and then you later on sell or square up and you made say $50,000 as a profit, that $50,000 profit is totally tax free as far as the customer is concerned. There is no capital gain or any business income tax which is applicable as far as the customer is concerned. And the second aspect is for the broking firm which has gone and set up a company there. Now they have an entity which is like, for example, PhillipCapital, as PhillipCapital India, which operates in Mumbai and in India, and then they will have another firm called PhillipCapital IFSC, which will be an entity which will have its registered office in GIFT City. Now this new company which is set up is a legal person there. This company will get tax benefits over 15 years, which is what I said, where first 5 years is 100% tax free, next 5 years is 50% tax free on their entire business income, and the last 5 years is carry forward, subject to a MAT of 9%. And additionally, PhillipCapital IFSC, which may be held by either PhillipCapital Singapore or PhillipCapital India, if it makes profit and if it pays dividend back to its parent, there is no dividend distribution tax applicable to it. So these are some of the benefits which a member firm gets. But effectively for customers, because at this point of time only non-residents are allowed, which means foreign residents, no Indian resident or Indian individual can trade, though Indian corporates can trade. When they trade on the IFSC exchanges, they are completely exempted from all kind of capital gains tax. Again, there's a follow-up question from Vaibhav. He's saying, what is the current status in terms of number of active members? I did mention that roughly about 40 member firms are already active. These are some of the big proprietary trading firms in India. And as we speak, there are quite a few institutional broking firms which are also now becoming active as far as the exchange is concerned. So roughly about 40 members are active. The average daily volume is roughly in the range of about $700 to $800 million. We have hit a peak volume of almost $1 billion in a single trading day. GST is, again, Vaibhav has the right point. Is GST applicable? GST is only applicable for firms. So the broking firm, like I mentioned, PhillipCapital IFSC, if they do the necessary paperwork, they will be exempted from GST as far as all the services which are rendered from IFSC is concerned. So even GST is not applicable. Membership cost. If you want to become a member, we have 3 types of membership, which is very similar to what is offered by Indian exchanges. The first is called the trading membership, only trading membership, where one can become an executing broker. Here the minimum net worth requirement specified by SEBI is Indian rupee 1 crore equivalent, which has to be converted in US dollars. So it is approximately about 150,000 US dollars. It's the net worth. And as far as the exchange is concerned, they take a deposit of $75,000. Now, the second type of membership is a self-clearing member. A self-clearing member is somebody who trades and also clears for himself. And here the net worth criteria set up by SEBI is 5 crore Indian rupee, which is equivalent to 750,000 US dollars. And the third one, which is the professional clearing membership or a trading cum clearing membership, wherein one can trade and also clear for self as well as for others. That is, the net worth requirement is 10 crores, which is almost about $1.5 million. So these are the three types of membership. That is the net worth. But as far as the deposit is concerned, one has to pay the exchange only $75,000 as a deposit. Right, Pratap?
Trading 10,000.
Trading members have to pay a deposit of only $10,000. Clearing members will have to pay a deposit of $75,000. So this makes us probably one of the lowest cost membership as far as any international exchange is concerned. If you go to any of the other competitive exchanges which I talked about, their membership costs are much more humongous. And there is an annual subscription charge of $3,000 which is to be paid every year. So $3,000 is all your sunk cost. So I hope I've answered some of these queries, and if there are more queries, I will be happy to take it as well. So thank you very much for your patient hearing, and look forward to all of you participating in the GIFT City at India INX. And let me also thank PhillipCapital for organizing this webinar. I'm sure many of you will probably now look at the IFSC closely and look forward to participation from all of you there. Thank you very much.